Welcome back. So let's address the big news that came in post-market hours yesterday. SEBI did have that board meeting, and it has finally come out with revised mutual fund regulations. This is after 3 decades. I mean, the original regulations go back to 1996, and now we have a new set coming in. Now, for the market and for investors, it seems SEBI has managed to find some kind of a nice middle ground, because there is a change in the way the total expense ratio is going to be calculated. There is also a change in the amount of brokerage that mutual funds can pay brokers. But like I said, I think SEBI's tried for a middle ground. Let's discuss this and more with Sandeep Parekh, Managing Partner at Finsec Law Advisors. Sandeep, morning. Thanks so much for joining us early on. But, I was discussing this with a mutual fund practitioner before the board meeting just yesterday. And I was saying maybe SEBI will do something in the middle. And they also don't know, they're a financial group that also has a brokerage. So the gentleman said that, no, but middle is not good. We would have wanted the brokerage fee to stay where it is. But what do you think? This was the big one, right? The big fear that 12 basis points will go down to 2 basis points. And SEBI also clarified yesterday that net of all the statutory fees and charges, it's basically 8.59 basis points going down to 6 basis points. You think they've managed to keep everyone happy?
No, I don't think they managed to keep anyone happy. No, because if you look at it as a percentage, it's a big number, right? It's 25%, 30% reduction of. See, before I kind of comment on the specific, I think broadly, my view has been that, the regulator should not be getting into price fixation, right? It should do that only if competitive forces are not working. Let's say if there's a monopoly, if there's an oligopoly. So, from first principles, I'm not a big fan of setting caps on any products, not just financial products. Having said that, I think they've tried to do a couple of good things as well, which is the unbundling of the regulatory expenses. They've tried to unbundle brokerage, which I think it's kind of a mixed bag really. It's good in terms of clarity, but it will have second order impacts. For instance, the smaller funds will not be able to afford the research reports which came bundled till now. So I think there will be several consequences. Again, the direct consequence, of course, who doesn't like low prices, right? So it sounds like a great thing, but there's always a cost attached.
Yeah. Okay, so let's take it step by step. I'll go back to the brokerage issue in just a bit, but let's look at the TER itself. And for the benefit of our viewers, basically a total expense ratio of a mutual fund will now have several components. It'll have the base expense ratio, which is the only thing that the AMC itself can sort of set, and that also has limits. Then there are the regulatory and statutory fees, including taxes. And then there is the brokerage that is being paid. Now, Sandeep, on the base expense ratio, again, obviously a lot of these limits have been revised lower to account for the fact that statutory levies are now out of the BER, as it's being called. But again, it's not as harsh, because the October proposal was looking to reduce this expense ratio by almost 15 basis points for most funds which have over 2,000 crores of AUM. Final regulation is reducing the BER by about 10 bips across all the slabs. So do you think this sounds like a fair calculation now that the other fees and the taxes are out of the TER?
Yes, I think it's more fair. I mean, going back to my principle that why should SEBI set fees, fee caps? But yeah, I mean, it's not too bad in terms of what they've done versus what they've proposed. The industry has certainly grown. So I think, if you look at it from that principle, certainly it's a good thing. But it will favor the large funds and disfavor the smaller funds. And also it will favor the kind of the tier 1 cities where these are pretty reasonable numbers versus going into tier 3 towns where, I think people don't want to be paid 20 rupees or 100 rupees as commission. So, it will disincentivize distribution at the bottom of the pyramid really. So, I mean, there will be second order impacts, but again, SEBI's already decided this. So I guess there's not much we can do about it.
Yeah, I mean, these are the new expense ratios, and that's how they'll go out. From an investor perspective, the only good thing is that I'm very clear about now what is the fund charging versus what is the taxation. and what is the brokerage. The breakup is very clear to me as an investor.
That's quite good, I think. That's quite
Yeah. So that now coming to this whole brokerage issue, and I think over the course of the last 3 months, most mutual fund practitioners that I spoke with, or CEOs I spoke with as well, were saying this, that many of the smaller fund houses do not have the wherewithal to set up their own research teams, their own large sort of research outfits. Now, with this 6 basis points cap, what happens to institutional research? I mean, what do you see ahead in the coming weeks and months?
No, I think it will adversely impact both the funds and the brokers as well. And again, obviously mutual funds can't, even the large mutual funds can't hire the kind of analysts which many of the brokers have. You have people who spend their entire lives just looking at infrastructure or just looking at transport industries. If mutual funds start hiring those kind of specialists, they'll have a research team of 100 people. So clearly, there are efficiencies in a brokerage hiring a transport expert and then distributing that research to 45 or 50 mutual fund and many other institutional clients. It's much more efficient. It's more cost effective versus having 45 different transport experts in 45 different mutual funds. So I think it will certainly have a negative impact on the quality of fund management itself. And again, I don't think SEBI has looked at that. And it's not there in either the consultation paper or on the press release which came yesterday. What is the rationale for doing this unbundling? Unbundling sounds pretty good, and I think it's good when you look at regulatory and non-regulatory expenses. But here, unbundling is actually going to reduce the quality of information which a fund will have when they're making investment decisions.
Okay, and finally, Sandeep, anything that you picked out in terms of IPOs? There were some measures announced there as well, ease of doing business, more disclosures, etc. Anything important we should be aware of with respect to
No,
the
I
IPO
think they're marginally important, and I think they've rewritten stockbroker rules and stuff like that. So I think that's a good thing. Again, those regulations are not out yet, but based on what SEBI has said, they've drastically simplified the regulations, removed the anomalies, made the compliance cost lower. So I think seems to be a good thing, and I believe they're doing it for multiple other regulations as we speak.
Okay, all right. Thank you very much for your quick take. Quite helpful as we understand these new regulations that are going to be governing mutual funds and, of course, the IPO regulations as well. Thanks for joining in. You have a good day. That's a view from Sandeep Parekh coming in.